Gentlemen, thanks so much for joining us this lunchtime on Power Lunch. I just want to tell you something that occurred to me about 45 minutes ago. Before I ever report on results, I like to get the stockbroking view, and I spoke to a stockbroker and he said, I remember those Levys. They sold me a car radio in 1985 from the back of a blue Nissan. Do you remember that?
Really well. It was our first bakkie, or our first car that we ever got. We had to loan the money from our mother. And I think she wants her 18,000 Rand back, but we're just trying to work out how to pay her back.
Yeah, I'm sure you can find a way. By the way, the stockbroker said the radio never worked, so he wants his money back as well. I'll give you his number after the show. Revenue for the year ended May. Revenue pedestrian up 4%, 18.7 billion. Gross profit up 13% to 1.2 billion. EBITDA up 26%, and you can see the progression here. Headline earnings per share up 40%. Now, there's been a couple of once-off items as well, which has sort of skewed the latter numbers that I've just read out. What are those items? What happened?
So let's just start on the revenue line, because I think that's extremely important. You know, a lot of the new items like electricity, we're starting to act as the agent and not the principal, which therefore means we only account for the gross profit and not the revenue. So when you see the revenue up 3 or 4%, it's actually not really a true indication of how much revenue was up, because we're only acting as the agent. Exactly like electricity, where electricity we only account for the gross profit. On the once-off items, unfortunately, there was just one once-off item which we're bound to confidentiality. But I think very really important to note there was really in the stream of everything that we do and nothing out of the ordinary of what we do.
79.4 million, and despite the fact you're a public listed company, you can't say anything about that.
Correct.
Unfortunately.
Okay, all right. Well, let's have a look at, let's just explain exactly what you are now, because I remember interviewing you both, I think it was in 2007, in a different guise. I was anyway, not you. And there was all sorts of talk at the time. This is a 20 Rand share. You're trading away nicely at 6 Rand 10, 6 Rand 20. Is it because people don't understand what you do? And maybe we should explain what you do, because I'm a prepaid customer for a cell phone operator, and I go and buy 55 Rand or 110 Rand here and there. Also, if I rent a little seaside shack, I have to buy an electricity token. Is that you? Is there every chance that every time I do both of those things, you're the people that provide me with that service?
Sure, more than likely. I think the best analogy for our business is what Warren Buffett's doing in the States by buying off the railroads, realizing that product has to move from a supplier to a customer. We view ourselves as a virtual railroad. But by integrating into multiple suppliers and customers, we're able to deliver product and services at a very cost-efficient and a very effective manner, 24/7, 365 days a year. So the ability to now take a supplier's product into environments that traditionally weren't easily able for them to get to, or that they weren't be able to get their premiums in a manner that they were accustomed to, we've managed to now offer an offline and an online environment. Like you buy electricity, where historically you would only buy it where someone was technically online all the time to the municipalities, we now offer an offline coupon that allows you to recharge your electricity like you would reload airtime. So by creating a lot more simplistic way of reloading, you're increasing the consumer base for the suppliers. And the more and more products that can be put into our environment, obviously the more and more customers our suppliers will find over time.
So what sort of other products can your model be applied to? You've got electricity, you've got the prepaid telecommunications vouchers or tokens, whatever you want to call them. What else can this be applied to?
So I think to start there, what we really believe is the imagination is the limitation. You know, as Mark said, we've built this highway, it's really now how we fill it. So some of the products are prepaid water, prepaid electricity, gaming products. We've got transport, very big, obviously metro, gaming tickets in the form of actual game tickets of cricket, rugby, soccer. Metro can go all the way down to Gautrain. You're looking at mobile products, therefore really taking it as rural as you can go. Insurance, and of course, you know, one of the big ones and the big buzzwords at the moment, financial services, opening mobile bank accounts, offering products to the masses and taking product to the people rather than people to the product. product. So, you know, really excited about where our industry is going, really excited about not only the masses. You know, in the beginning when we launched, we tried to explain to people that prepaid is not a per man's product, but rather pay as you go. And I think that's really the catch, and that's really the difference which is happening, is you're finding more and more people wanting to understand their spend, wanting to control their spend, and they don't want surprises at the end of the month. And that is exactly what is happening in prepaid. You can budget to the last, you can give your kids or part of your family exactly what you need to spend, and therefore no surprises. So you're seeing prepaid not only what we considered in the masses, but now a pay-as-you-go product, not limited to a product, but really across the board, and finding everyone having at least one or two products in the prepaid world, or using it at least.
I mean, I agree with you entirely, because I switched from contract on my cell phone to prepaid a while ago. I mean, it's like the difference between having cash and a credit card. You've got a credit card, you're feeling a bit reckless, it's there, but if you haven't got the cash in your pocket, then you can't spend it. But anyway, sure, that's just me. Before we get on to your international operations, which are, to me, a little bit messy, let's have a talk about the threats to your business. I don't understand personally, and make this brief if you would, why the cell phone companies allow you to exist. Why don't they do it themselves?
I think really what you need to understand is, what people need to understand rather is, you know, we sit just below everyone, converging everything into a single distribution point. So whereas we're not exclusive to a network, to a product, to a bank, to electricity, currently, you know, we deal with 256 different municipalities, we deal with 5 or 6 different banks, we deal with 5 or 6 different networks. And what we do is we sit just below them, aggregating all of these products and services and delivering them to one central point. Why this is critical is, if you deal with the mainstream ShopRites and them who obviously have bigger cash flows and can do more, when you go more into the independent rural world, we are giving them the ability to have one wallet, one purse, but multiple products and services, and delivering exactly what they sell in, and therefore positioning ourselves extremely powerful, or extremely in a good way, which gives tremendous value to the individuals, the suppliers, the municipalities and the telcos, but more importantly offering tremendous value to our customers, and therefore growing their natural business and making sure that independents remain very powerful in the developing worlds.
Let's talk about the overseas operations briefly. We've only got 1 minute left, so I'm sorry about that. But you're in Oxygen, India, you've got UCash, you've got Mexico. You haven't been successful in Nigeria. Now, the trend on Power Lunch in the interviews we've had with CEOs recently is the fact that South African companies are suddenly seeing Africa on their doorstep. Why haven't you made more of a foray into Africa? Because prepaid to me in Africa is an absolute goldmine for you.
Look, prepaid is an emerging marketplace. So from our perspective, you know, we pick territories where we're able to get the maximum upside. India is a continent. You know, we have over 100,000 points of presence. There's 1.2 billion customers. Mexico, you know, very big markets. We've been in Africa, we've been in Mozambique, DRC and Nigeria, and left those markets for all different reasons. You know, Mozambique and DRC selling to the local partner. Our limitation is resource, so we'd rather try to find territories where we can be a bigger player in those markets. And I think what we have on our cards in those 4 territories you just mentioned, including South Africa, there's massive opportunity for us in the future.
Okay, so the prospects are that those people that said when you listed in 2007 this should be a 20 rand share, when are we going to get to that? What are your prospects?
They're really looking good. Our prospects are heavily to concentrate on the 4 countries that Mark mentioned, obviously Mexico, South Africa, India and UK. Delivery of new products, making sure that every one of our customers not only sells one of our products, but at least up to 3 or 4, therefore creating tremendous organic growth. We sit with just under 2 billion rand of free cash, and therefore gives us a great opportunity for acquisitions. So really find ourselves in an interesting position. Prospects, grow new products, grow our distribution base, and of course look out for acquisitions that will grow us not only organically, but will speed up our growth.